We have a somewhat upbeat start to the trading session today. We're hearing some more positive commentary from some of the specialists we've spoken to this morning after fairly beaten up performance for some names on the stock market. What do you think? Is it time to dip a toe in the water?
Good morning. Well, we've had a very, very sharp derating of the market, indeed. I think, the background is the market has been trying to absorb as fast as it could, slowing growth prospects, very high inflation, an outlook with rising rates, and obviously geopolitical turmoil. We then are coming out of a results season, the Q1 results season, and the next, we've got a sort of gap in news until probably, I'd say, 15th of June with the Fed next news, and then on the 27th of July with the ECB and the Fed. Between that time, we're likely to see obviously some movement. And our perspective at Citi, we were at the beginning of the year expecting flat markets, so essentially both for the world and for Europe. We've seen that sharp derating, so we are now at a point where we see upside on a 6 to 12 months basis of between 20 and 17%.
I noted in your portfolio that you favour the UK and emerging markets over the United States and continental Europe. Just flesh out that case for us, because we know that there's still some pain trade when it comes to EM when we watch that strengthen the US dollar.
Yeah, absolutely. I think the key is to look what has driven that sharp derating, and we highlight specifically the correlation to real rates being nominal rates minus inflation, and obviously as we compute that and we look at the inverse correlation, we really see an inverse correlation with the market. However, that inverse correlation doesn't work the same for value or growth, and we know that specific market have a specific tilt. Particularly the UK market tends to be very much a proxy for value. And so that's why we would heavily recommend, the UK market from that perspective, but also certain sectors. So within Europe, for example, financial exhibits those characteristics, the value characteristics. And the idea is that as you see real rates going higher, we do expect them to go higher. You get more, perhaps a better form of protection if you are, invested in the value space.